Hey everyone, Ben Williamson from InvestorHub with the third instalment on the ASX here for the Capital Market School. So why would a company choose to be listed, right? There's obviously requirements to be listed, there's work to do, etc. But the two main reasons, there's a few sub-reasons, but the two main reasons that companies choose to be listed are access to capital, so ability to raise cash, and liquidity for shareholders, right? So the actual listing process, why would you go through an IPO? It takes 6 months, it's all this work, blah, blah, blah. One, you're raising money, right? So you're raising money from a pool of investors who are otherwise probably unable to or don't want to invest in the private version of you, right? So that's one. And then the other option is that you've got existing shareholders who want to cash in, and they might want to cash in at different levels, at different time frames, etc. And so by being listed, they're actually able to do that off their own bat without you needing to arrange lines or the like, as you would normally do in a publicly unlisted or a private company. So the two big reasons are literally you want to raise money, and you might need to raise a lot of money over a long period of time, right? You think explorers, you think tech development, you think life sciences, right? Constantly raising cash without cash coming in. You need access to the capital market in order to bring that in, and the ASX is very, very good at that. And then the other side, both for those initial holders and these people coming in on the journey, giving them the ability to have liquidity, giving them the ability to get out on their own time frame, which also then decreases the risk for them, which means more access to capital, and it sort of builds and builds and builds. But that's why you would want to do it. Access to cash and access to liquidity.